All right. As I said before, do not count out silver and gold. Now, over the course of the last couple of weeks, I have been eyeing bullishness here within gold and silver. And before I get into the exact reason why, hit that subscribe button down below if you're new to this channel and you're interested in gold and silver and precious metals in general. Could be interested in copper or what have you. But on this channel, we talk about gold and silver nonstop, pretty much daily. And I like to track what happens with the price movements, whether it's good to let you guys know what my take is, or bad in case you're thinking, I'm kind of on the fence here. I pretty much give both sides. Right now, the side that I'm looking at is positive. As you can see here, gold is up at $18.13, silver's at $24.05. Pretty strong move today to end the week. Now, the reason why I feel so confident about these guys, and I actually will start out with gold, and this will have a play regarding what will happen with silver, and this is gold right here, is that gold is crushing it right now. The 250-day moving average, and actually I'm going to change this to 253, mainly because it is the average trading day annually, so it'll kick it up a tiny bit. But I used to just default to 250 because it was easy to write 2060 250. But technically, it's 253. And we bounced above it. And as you can see here, a golden cross is coming. And funny enough, this line here is pretty much in gold. But the 20-day is the blue line. And it's already crossed above the green line, which is the 60-day. And the 253-day is falling quite fast, while the 20 days moving up quite fast. So again, there's some bullishness here regarding the gold price. And the great thing is that over the course of the last several days here, it looks like we're actually trying to bounce back above where we fell from as far as highs are concerned. Hit a high of 1813.94 at one of the last highs before we came down, and currently we've hit a high about 1815 today. So it looks like we are pretty much on the move with some strong price action in gold. And again, it's set up by what I see here, which is pretty much the cross, and it looks like we're going to hit a golden cross pretty soon. Well, what does this have to do with silver? Well, those of you who study gold and silver know that silver tends to lag behind gold prices, but that lag doesn't mean it's out for the count right now. As you can see, silver had its own cross above the 60-day with the 20-day, and it looks like it's on the path to cross above the 253-day moving average itself. However, it is the gap is a little bit wider. So I firmly believe that once gold gets above the 253 moving day average, we should definitely expect silver to, by that point, really start moving aggressively up to the upside. And again, this is all based on the fundamentals, guys. We just got some new data today regarding the unemployment rate, regarding even employment costs. And employment costs tend to lag behind inflation. Employment costs from Q3 has risen so aggressively. It's just, hold on. I'm actually going to pull it up right now so you guys can see it. Okay, so before I actually show you that dramatic rise, I want to read this brief statement from Investopedia. And I quote, "The idea is that wage pressure increases in lockstep with inflation because compensation tends to increase before companies hike prices for consumers. Therefore, it is considered an inflationary tailwind when the employment cost index exhibits a steepening trend line or a greater than expected increase for a given period." Now, remember this, greater than expected increase for a given period, and also steepening trend line. Well, take a look here. Compensation costs for civilian workers in the U.S. increased 1.3% quarter over quarter in the 3 months ending September of 2021, quickening from a 0.7% rise in the previous period and faster than market expectations. And what did we say before? A greater than expected increase for a given period. And there's an expectation of 0.9. So let's scroll down here and see what this graph looks like. So over the course of the last couple of years, this is pretty much where we were. And this is what happened in the last quarter, that huge spike. So again, this will, or inflation will match this in the future, match this movement. So with the employment cost index rising, we should expect inflation to rise even more in the future because of these input costs. So again, this is something that assets like gold, assets like silver are sniffing out in the market. So that's why we're seeing things like, hey, there's a going to be a golden cross here for gold, and then soon silver will likely follow suit with its own golden cross. What I also find interesting is that while all of this is happening, we're seeing, let's scroll down here and I'll pull this up. We're seeing Bitcoin actually struggle a little bit over the course of the last few days. As you can see here, same moving averages, and the 20-day looks like it's kind of topping out a little bit, while the 253 and 60-day are rising. And for me, I'm not 100% certain in saying, hey, it's going to fall down. I'm not saying that, but I'm saying, hey, it's kind of interesting that it's kind of, flatlining a little bit, the 20-day moving average, I should say, while silver is actually, and gold and silver are actually rising with the expectation of inflation. But obviously, when you put these things together in my monthly forecast, specifically for gold, it makes sense. And again, when you use my forecasting model, again, I'll make this available to you guys soon. But for the gold price, when you combine it with all the other factors, even though there's a strong correlation between gold and silver by itself, gold and Bitcoin by itself, when you include other factors, it actually shows a relationship that we've been seeing recently, which is those fund flows leaving Bitcoin will actually go into gold, which is pretty interesting. But what we also see is that when Bitcoin's rising, silver also rises, which also kind of shows a little bit of that lagging relationship between gold and silver. But currently right now, my forecasting model is around $24.25, and currently silver is at $24.05. So pretty much right now, my model is literally off only by 20 cents, which is pretty fantastic. So guys, let me know what you think about these moves and about the overall trend that we're seeing and the positivity that we're seeing filtering back in to the space for gold and silver.